Trump tariffs went into effect at midnight, including an expected 104% tariff on China. The U.S. Customs and Border Protection said it is prepared to begin collecting country-specific tariffs from 86 U.S. trade partners starting at 12:01 a.m. Eastern Time. Hello, this is Global Business Insights, where we take a deeper look at the headlines, the business headlines moving markets all over the world. First, let's look at some of the main stories today. Meta is asking Instagram users under 16 to get parental permission to view some live streamed features and will in future blur images thought to contain nudity in the messages of under 16s. Meta would also extend its teen accounts, which filter content and restrict contact lists on Instagram to Facebook and Messenger. Italy's state railway company Trenitalia is launching a high-speed service connecting London and Paris, working with Evolyn, a Spanish startup. Trenitalia's parent company, FS Group, is investing $1.1 billion to create a real alternative to air travel. Yesterday, technology stocks bounced back after three rocky trading sessions, encouraged by rising optimism that Trump could potentially negotiate some tariff deals with world leaders. Nvidia led the Magnificent Seven group's gains, rallying about 7%. 10 of the S&P 500's 11 sectors were in positive territory most of the day, with financials and tech among the best performers. Only energy was always lower as oil prices continued to slide. But US stocks still tumbled in late afternoon trading, ending lower after the White House said it will move forward on a threat to bring the overall tariff rate on China to 104%, and that they did at midnight. European markets yesterday also closed broadly higher, breaking a 4-day losing streak. Trump said he had a great call with Han Duck-soo, acting president of South Korea, and a delegation from Seoul was on its way to the U.S. to begin a trade negotiation on reducing tariffs, reducing also the deficit borne by the U.S. by large-scale purchase of U.S. LNG and other matters, including payment for military protection provided to South Korea. The European Commission has also said that it is ready to discuss replacing Russian LNG by buying more from the US as part of trade talks with the Trump administration. Europe, however, do not want to be dependent on a single source for its energy, including the US. The UK Prime Minister Keir Starmer said on Monday that they could secure an economic partnership with the US to dodge the 10% tariffs imposed on British exports to the United States. US Treasury Secretary Scott Bessent also has been fueling hopes that trade deals could be made, thus improving the market mood. In a recent interview, he clarified that Trump will be personally involved in negotiations which, if successful, could see tariffs melting like ice cubes. Taiwan Semiconductor Manufacturing could be facing an over $1 billion fine to settle a U.S. export control investigation over a chip it made that ended up inside a Huawei AI processor. The U.S. Department of Commerce has been investigating TSMC's work for China-based Sofego after a TSMC-made chip matched one found in Huawei's high-end Ascend 910B artificial intelligence processor. My deep dive is on a new era of dissatisfaction. The world's largest economy has in recent times seen a seismic shift, political shift that has puzzled many. The declining support for the Democratic Party among working-class voters that led to Trump 2.0 reflected a deep disenchantment with an economic system that, if the truth be told, under both parties, concentrated wealth at the very top, enabled the growth of the financial sector and global stock markets at the expense of the rest of the economy, trapped people and countries in inescapable cycles of debt, and deprioritized the well-being of billions of not just Americans but people all over the world. In other parts of the world, like in Europe and the UK, high inflation driven by supply factors played out as COVID and a war in Ukraine complicated supply scenarios, drained wallets, and intensified the discontent. In Africa, the promise of stable democracies in the large economic hubs of South Africa, Nigeria, Kenya, and so on has not led to the broad economic well-being many had expected. The political evolution, some say, need time to play out and mature. Others say it is not delivering the vision simply because it cannot. In the US, Trump's grand new experiment that has been extensively derided by the best of minds as reckless comes at a time of deep hunger for a different path, which should start with admitting that the old order was not working for the majority. If you study how change works, there are two issues. First, the demand aspects of change, and the other is the issue of supply. Where the demand and hunger for change way exceeds the supply of a new appropriate course of action, the gap can lead to deeper dissatisfaction, but also patience with methods and ways that are odd, but many hope will lead to a new direction and mature into something better. The elephant in the room is that those who have opposed Trumpism are still weak on alternative proposals and still blind to the dissatisfaction that birthed a different movement. It is a good thing that Europe has woken up on the need to be more competitive, to spend more to defend itself, and be less reliant on a wealthier cousin across the ocean. They have Trumpism to thank for being dropped from the cozy nest and allowed to fly on wings they already had. For Africa, analysts are also right in saying the tariff blitz doing what years of diplomacy haven't, and that is to push African nations to double down on their stalled free trade pact. It could serve as a long overdue wake-up call for the continent to speed up efforts toward deeper intra-African trade under the African Continental Free Trade Area Pact. While new tariffs are playing out and markets are gyrating and more complain about this and that, I see the vacuum in alternative visions that admit the failings of the past, but also alternatives that are compelling to show that the past and today's corrections are unlikely to lead to that golden era. Today's actions could be good in that they are distant from an old order and erase old paradigms of the past, like aid to Africa enmeshed in corruption, or an imperfect free trade myth where trade was never really free and was biased to serve some better, or a China rising amid totalitarianism and state-led dictatorial foundations, or Africa hopping one step forward and sometimes many steps backward. Also, saying no to the past and dissatisfaction with the status quo could make it easier for better solutions and better ideas to emerge. However, burning Teslas is a stupid response, and the toxic rhetoric to demonize and pray the new US administration fails is infantile and does not move any needle. Asking to pause Trump's orders will also most likely not be heard. And this especially if we do not accept that the old order was not working for many people, many less advantaged on Main Street and many other forgotten streets. Don't expect any sympathy for Wall Street from Main Street when it stumbles occasionally amid its apparently resilient multi-year unassailable ascent. We are in an era of dissatisfaction, still awaiting a new vision, and we are not talking of left or right. We are not talking of a vision that will not disturb Wall Street and the money machine of today's billionaires who milk it. The mood of markets should really have very little to do with needed solutions that will improve the well-being of ordinary people. We will pursue this theme in subsequent chats. Kenya's central bank yesterday cut its policy rate for the fifth meeting in a row by 75 basis points to 10%. It was an unexpected move aimed at further stimulating private sector lending. Later today, the EU votes on a proposal to impose retaliatory tariffs of up to 25% on 21 billion euros worth of US imports, which could trigger an even more aggressive response from Washington. South Korea announced 3 trillion won, that's $2 billion, of additional support for its automobile industry in response to the 25% tariff from the US earlier this month. Other measures include financial support for automakers as well as discounts and tax cuts. Perhaps the biggest loser from tariffs on China is Apple. Apple has lost its title as the world's most valuable public company to Microsoft after the stock slid a day before steep tariffs on Chinese imports took effect. Trump has also signed an executive order that triples the previously announced tariff rates on low-value packages exported to the US from China via the International Postal System. The new rate will be 90% of the shipment's value, or $75, rising to $150 after June 1. Trump also said his long-promised tariffs on pharmaceutical drugs will be coming soon, the latest signal that he plans to press ahead with more sectoral tariffs despite market fallout from his global levies. Late yesterday, Trump had said China is manipulating the Chinese yuan to offset against tariffs, adding that he expects China to reach an agreement with the US on trade eventually. US Republican Senate leaders also weighed in on the need to quickly conclude negotiations that will reduce tariffs across board and reduce the risk of economic pains. Earlier, United States Trade Representative Jamieson Greer had said during the Senate Finance Committee hearing that they are currently in talks with 50 or so countries about tariffs. Also in the US later in the day, Federal Reserve Bank of Richmond President Tom Barkin is scheduled to speak, and we also get minutes of the latest FOMC, that's the Federal Open Market Committee meeting, both shedding clues on the interest rate path of the apex bank. Asia-Pacific markets were mostly lower as US country-specific tariffs come into effect, also as momentum towards negotiations pick up. Oil prices resumed its downward plunge down to the lowest in more than 4 years in early trade on demand concerns, not helped by ballooning trade tensions. This morning, Brent Standard was flirting with $60 per barrel. It's under $61 as we speak. And in Europe, stocks are mostly lower, opening with the FTSE 100 falling about 2.5%, dragged down by miners and financials, while the FTSE 250 is also 1.8% lower at open. And just in, we gather that China's top leaders are meeting early today to discuss measures to boost the economy and stabilize the capital markets. Indeed, it's been a busy week so far, and markets continue to be rattled, and negotiations and more tariffs apparently still playing out. Indeed, the bumpy ride on markets continue as we also see US futures erasing their decline in early morning trade. Well, that's all on this episode of Global Business Insights. Thanks for watching. This is Bode Oshosami. Bye-bye.